Good afternoon. I'm Dr. Fakazeem101. This will be the continuation of our previous video. Our previous video centered on cashbook, where we said cashbook is a subsidiary book where transactions are recorded, where cash transactions are recorded. We said cashbook is classified into three: the single column cashbook, the two column cashbook, and the three column cashbook. In our previous video, we have looked in details on single column cashbook, but in this present class, we'll be looking at the two column cashbook. And the next thing is, what is two column cashbook? Two column cashbook is a twin cashbook which include cash and bank on debit and credit side. Two column cashbook is used by business entity that deals with cash and bank transaction. What this means is that as a business entity, if you transact your business with cash and also accept money through the banking system, either through check or through transfer or through online banking system, you are to make use of two column cashbook. For instance, if goods are sold and customer pay into your account with check or online transfer, you must create a column for bank in your cash book. But if the transaction take place on cash and carry, you must also create a column for what? Cash. The process at which you record under the cash column and for and under the bank column is two column cash book. Now we have what we call contra entries in two column cash book. We call it contra entries. What is contra entries? Contra entry is when office cash and bank transaction are recorded for the same transaction for the same what? Date. What do we mean by this? In some organization or some business entity, all sales by cash are later banked on the same day. For instance, 1 million naira goods was sold by cash on the 5th of January, and the cashier collected the 1 million naira in cash as a result of sales. But it's the policy of the organization that all goods sold by cash must be deposited to the bank at the end of the same day. A contra entry will occur. This is it. When cash is collected, you debit the cash as an inflow of cash. When the same cash is deposited in the bank, you will credit the cash for one reason: to cancel that cash. After canceling the cash, what do? You put the money in the bank. It means you debit at the bank. And that is Contra entries are recorded twice. All entries in the cash book are recorded once. But for contra entry transaction, you have to record it twice, on debit and credit on the same date. The two entries are on the same date. One is to cancel the cash, one is to record for bank. And sometimes one is to cancel for bank and record for cash. What are likely transactions that can result into contra entries? Let's see example of transaction that can result into contra what? Entries. These are example of transactions that when you see, you discover that this transaction are contra entry. One, if we say cash paid into bank is a contra entry. Two, we can also say, instead of writing it as cash paid into bank, we can say cash banked is also a contra entry. Three, instead of writing it as cash bank, we can write it as cash till. Till means T-boss. T-boss is where money are kept in the bank, meaning the T there is representing bank. Four, we can also say cash withdraw from the bank for business use, or we can call it for office use. These are contra entry transactions. Let's look at it. Cash paid into bank. Bank receive, debit. Cash is given out, credit. Cash banked. Cash receive, debit. A bank receive, debit. Cash is given out, credit. Cash till, meaning cash into bank also, debit bank, credit cash. Now, cash withdrew from the bank. This time, from the bank. Bank is an outflow. You credit bank and you debit cash. This is how we treat it in the two-column cash book. From this, let's look at the format of two-column cash book. The format of two-column cash book looks this way. You divide it into two. After dividing it, you put a debit and a credit. You give it heading to column cash book. It has date, it has particular, it has folio. Now, the single column now is split into two. Now, this is cash and this is a bank. On the credit side, we also have date, we have a particular, we have a folio, and we have cash and bank. For every inflow of money into the business through cash is going to be on debit side. For every inflow of money through the bank is going to be on debit side. For every outflow or any payment made by cash will be on credit side. And any payment made through the bank will be posted on credit, which means if you make any payment through the bank, you put it on credit. If you make any inflow through the bank, you put it on debit. This has always been causing a serious misunderstanding among the students or among those people who have been operating a bank account. For instance, if there is inflow of money into your business bank, you observe that the bank will send you a credit alert, but now we are telling you to record it on debit. That is like a confusion. That is not. Let's give detailed explanatory to that. If there's an inflow of money into your bank, the bank has their own book. This is your own book called cashbook. This cashbook is for the customer. What the bank is telling you is this: there's an inflow into your account. We have credit our own book in the bank. For checks and balances, open your own cashbook and record your own on debit side, which means an inflow. And what that one means is this: once there's an inflow, the customer record on debit side of his cashbook. The bank will now record on the credit side of their bank statement. The bank statement is being kept by the bank, is the bank book. The staff of the bank kept the bank statement. Now, anytime you are sent an SMS of a credit alert in your bank, the bank is trying to communicate to you that the book that we are keeping on your behalf in our bank, we have credited. You also open your own cash book and do corresponding, you will debit. Anytime you make payment through your business bank, payment means you have to credit. There's an outflow of money from the side of your business. Once you credit, the bank is not meant to credit too because they are not the one giving out. The bank is meant to do the opposite of your own posting. In that case, the bank will send you a debit alert as a message, as a reminder that we have debit our own book. Don't forget to update by crediting your own book. Meaning, if the bank is debiting their bank statement, the customer is meant to credit his cash book. And if the bank is crediting the bank statement, the customer is meant to debit his own cash book. The cash book is meant for inflow of money, either through cash or bank, and outflow of money, either through cash or bank. That is that. We'll be looking at a detailed illustration of two-column cash book. A detailed illustration of two-column cash book. This is the question. The following transaction was extracted from the book of Fatty Store as at 31st January 2019. January 1st, commenced business with 100,000 cash and 80,000 into the bank. On the 2nd, paid rent by cash. On the 5th, bought goods by cash. On the 10th, sold goods by cash. On the 11th, cash paid into bank. On the 15th, bought equipment by check. On the 25th, cash sales paid directly into bank. On the 30th, withdraw cash for personal use. On the 31st, withdraw cash for business use, 2,000. Required, record the transaction above in two-column cash book. In two-column cash book. How do we solve this? We'll first put the name of the business. Party stores. After that, we'll draw the two-column cash book. We'll put debit and credit. And the heading will be two-column cash book for the month January 2019. Now, we'll put column for date. After date, we put particular. After particular, we put folio. After folio, we put cash. After cash, we put bank. On debit side, we also do the same for credit side. dates, particular, folio, cash, and bank. Don't forget to put the currency of your country, naira sign, naira sign. Now let's solve. All entries are to be recorded once. The first entry is commence business with 100,000 cash and bank. This is an inflow. We're only keeping record for cash and bank. We'll come here January 1st. What caused this inflow is commence. And commence here is the particular, and that will be capital. When they commence this business for party store, the owner of the business puts into the business a cash of 100,000. Inflow of 100,000 into party store. And the owner of the business also open a bank account strictly for the business and put into the business another 80,000 into the bank account of the business, which means party store receive 100,000 cash and also 80,000 into the bank account of the party store. Through through the owner. What is representing the owner of this business is capital, which means we have debit cash and debit bank. This business has 100,000 cash at hand and also 80,000 in the bank of the business as an inflow to commence business in January. On the second, paid rent by check. Anytime you see check, it means the business is paying out money through check, paying out money from their account through check. And that is January 2nd. How much? This check means you are going to keep the record on the bank. What are they paying for? This payment is for what? What they are paying for is your particular. And that's what I'm underlining now. Your particular is what? Rent. Which means that the payment through bank is for the purpose of what? Rent. And this is the payment side. On the 5th, bought goods by cash. Meaning, party store is buying goods and making payment through cash. Here's the payment side of the cash book, the credit side, and that's on the 5th. What are they paying for is the particular, and what they are paying for is bought goods. And we said anytime you see bought goods, your solution will not be bought goods. What you are going to write in your solution is purchases. And this time they are making the payment through cash. On the 10th, goods were sold also by cash. Party stores is selling goods to customer and is receiving the money by what? Cash. In that case, this is an inflow. On the 10th, an inflow of sales. How much? 80,000 cash. We have record. Now, on the 11th, cash paid into bank. This is a contra entry. This is how a contra entry transaction look. Why do we say it's a contra entry? There's a sales of 80,000 on the 10th. Out of the 80,000 naira in the hand of the cashier is meant to deposit 60,000 in the bank. You will see what will happen in the cash book now. Cash into bank. There's an inflow in the bank. Bank is debit. There's an outflow of cash. Cash is credit. Meaning this contra entry will be recorded twice. And that is the only transaction that can be recorded twice in any cash book. Only contra entry can be recorded. On the level is a contra entry. Cash paid into bank. We'll come here on the level. Cash into bank. Inflow into bank. 60,000. What do we deposit in the bank? We deposit cash. In bracket, C. The C there stands for contra entry. But I said we record it what? Twice. For every debit entry of it, inflow of cash of bank, there's outflow of what? Cash. We'll come here on the same 11. Now there's outflow of how much? 60,000. This outflow is as a result of what? As a result of bank contra entry. It mustn't be on the same line, but it must be recorded twice. Now, what does this mean? Let's look at it in a practical angle. On the time they receive 80,000 cash, meaning there's 80,000 cash at hand through their what? Face. But on the level, the cashier is meant to deposit the money in the what? In the bank. What did he do? He deposit how much? Only 60,000. Meaning the cashier is still left with 20,000 at hand. How do we do that? We have to cancel 60,000 out of 80,000 in cashier's hand. And that can only be done through the contra entry. How? Now, out of this 80,000 now, 60,000 has been put into the bank. Meaning, cash into bank. But if 60,000 has been put into the bank and you have recorded it, if you leave it like this, it means you are still telling us that there's 80,000 at hand, there's 60,000 in the bank. That's 140. But indirectly, there's no 80,000 at hand again. What is left at hand is just 20. How are we now going to do that? Is to remove 60,000 from this 80 by putting it on the credit side. That's why we record it twice. You now see that there's 60,000 on the cash side going out. And where have they put the money? In the bank. If you say 60,000 under this cash minus 80,000 under this cash, indirectly the cash is remaining 20,000 at hand. Why there's how much at bank? 60,000. If we have the 20,000 at hand now, with 60,000 at the bank, we have a total of how much again? 80. In that case, anytime you have cash paid into the bank, you have to record it twice. Who received the money? Bank. Where's the receiving side? Here. Debit bank with 60,000. Your particular will be what? Cash. Who is giving out the money? Cash. Credit cash with 60,000 naira. Your particular is what? Bank. That's what we said. Contra entry is when the cash and the bank are affected in the same transaction on the same date. You see that they are the same date. Now, let's go to on the 15th. Bought equipment by check. Now, there's a payment for equipment through check, meaning they are paying now through their what? Bank. You are going to credit that. How much? 10,000. What did they pay for through bank is the particular. The particular is what they paid for, and the particular will be equipment. On the 25th, and on the 11th are looking alike, but they are not the same. On the 25th said cash paid into bank. That's on the 11th. On the 11th said cash paid into bank. Contra entry. But on the 25th said cash says paid directly into bank. It's like saying says, but the money was paid into what? Bank. It's not contra what? Entry. The cashier did not keep any money at hand. The sales goes directly to the bank, and that's an inflow on the 25th. We are going to make the particular to be what? 6. The sales is into where? Into bank as an inflow. How much? 50,000. After this, look at on the 30th, withdraw cash for personal use. Personal use means drawings in accounting. Anytime you see the word personal use, we represent it with drawings. We withdraw for personal use the owner of the business. And we don't put the name of the owner of the business inside books of account. This is as a result of business entity concept that said the transaction should be strictly recorded for the business and not for the owner. The owner is a separate entity, while the business is a separate entity. Even when the owner put money into the business, introduce money into the business, the owner is being represented with capital. Now, if the owner too is taking out of money from the what? Business, we are going to represent the owner with a term in accounting known as drawings. Now, this cash was withdrawn from where? It was withdrawn out of Fati what? Store. Meaning it's not an inflow, it's an outflow from the business. Withdraw cash out of the business is an outflow. In that case, it will be on the credit side. We withdraw it, we can't put the name, but we know the money is taken out for the personal use of the owner. Maybe the owner has used it for his own personal birthday ceremony or for his father's burial. But we are still going to record it for him. Out of the money you put into the business, some has been taken out for your own personal what? Use. In that case, what was taken out was cash. And this is an outflow of how much? Of 10,000 naira. Your particular will be you have record for cash outflow. But what purpose did they take this cash out of this business? Is as a result of what? Personal use. The personal use will be written as what? Drawings. This is not drawings in fine art. The drawings is representing the owner of the business that has taken cash out of the business for personal what? Use. The last one is withdraw cash, but this time not for personal use, for business use. Anytime you see the word for business use or for office use, it is also a contra entry. But the sentence has been shortened so that the student will not know the mind of the examiner. Now, when they say withdraw cash, it means they are withdrawing cash from the bank. That's what they remove from this sentence. Withdraw cash from the bank. Go to the example of contra entry. You see where I put it in full. Withdraw cash from the bank. This time, the bank is the one giving out. The bank aspect was hidden. They withdraw the cash from the bank, meaning bank is giving out. Taken out of bank, this out. What did they take out of this bank? Cash. In bracket C. C there means contra. But you know that contra are recorded what? Twice. If bank is on credit side, withdraw out of what? Bank. For the purpose of what? Cash. And that is on 31st. This place will now be bank, contra entry. Under cash, 2,000. Why do we normally have something like this? There are some cases that some businesses need to acquire some item. But where this item is to be acquired, they don't accept check. They only accept cash and carry. And your company does not have cash at hand. What your company will do is to go and withdraw 2,000 from the bank. And what means minus 2,000 from the bank. After withdrawing, the money is now at hand. Plus 2,000 to the what? Cash. You have cancelled 2,000 from your bank, and the 2,000 is now at hand. Now that the money is at hand, they can now use it to acquire any item by cash. Now, this means taking 2,000 out of the bank, withdraw cash from the bank. For what purpose? For the purpose of what? Cash. Credit bank, out of bank, debit cash. That process is contra entry. Let's go to on the level. That one is cash paid into bank. Bank is debiting this time 60,000. What was going out was what? Was cash, credit cash. This one too is debit cash. Withdraw cash from where? We don't know, but we know that it's from the bank. Withdraw cash, debit bank for business use. Meaning, withdraw cash from where? From bank. Bank would be what? Credit. That procedure is known as contra entry. After this, we are done with posting, recording in the 2-column cash book. The next is how do we balance a 2-column cash book? Let's start from the cash aspect. We'll add the debit side of the cash. You don't need to show this. Just total it. 100 plus 80, 180 plus 2,000, 182,000 for cash. On the credit side, 40 plus 60, 100 plus 10, the credit side will be giving us 110,000. Where's the lower side? The lower side is the credit side, and that's the balance carried down. On 31st, we'll say balance carried down for cash. We'll now say 182 minus 110. We'll find their difference. Their difference is 72,000. That's the balance carried down for cash. What does this mean? In the month of January 2019, they have a total inflow of cash of 182,000. Out of 182,000, the company make a payment of cash out of 110,000. Meaning, if they remove the 110,000 paid out from the total inflow of 182,000, meaning the total of debit minus the total of credit, 182 minus 110, they have a balance of what? 72,000. And what this means is that Fatty Stores, the company or the business, has a balance of 72,000 at the end of January. In that case, let's look at the bank column. Under the bank column, let's look at how much is their debit. 80 plus 60, that's 140,000. 140 plus 50,000, that is a total of 190,000 debit. On credit side, they have 20 plus 10, that's 30. 30 plus 2,000, that is 32,000. Now, if we said, where's the lower side again? The lower side for bank is credit side, meaning the balance carried down will still serve for bank. How much is the total money in their bank? They have a total of 190,000 in the bank. They have paid out from the bank of the business 32. 190 minus 32, they will be having 158,000 left in their bank. For this, for the month of January, account close. How do we close the account? 100 plus 80 plus 2, that's 182. 80 plus 60 plus 50, 190. On the credit side too, 40 plus 60 plus 10 plus 72, 182. 20 plus 10, 30. 30 plus 2, 32. 32 plus 158, 190. For the month of January, account has been officially what? Closed. Now, if this is balance carried out on 31st of January, on February 1st, that's balance brought down. Meaning this is the closing amount of cash they have at the end of January business in their cash, and this is the closing amount they have in their bank at the end of January. This amount will be used to continue business in the month of February, and in the month of February we call it balance brought down. For cash is 72,000, and for bank is 158,000. We have come to end of this solution. But mind you, this cash book also, these two columns can also be posted to Ledger. But note, if you are posting each of these items to Ledger, please don't post Contra entry to Ledger. Why? For Contra entry, the two sides has already cancelled each other. All other items can be posted to Ledger, but you don't post Contra entry to Ledger. Thanks for watching our video. I would believe that going through this question and this solution, you have understand two column cash book better. And what's the difference between single column and two column is that single column only take care of one particular means of transaction. If you are dealing only with cash, you are using single column. But if you are dealing with cash and bank, the appropriate cash book for your business is two column. Thanks for listening. Don't forget to subscribe to our YouTube channel. We pray that Almighty God will bless you and increase you in knowledge. Thank you.